Yo, what's up, everybody? It is Monday, December 5th. Bad day. Bad day. No, it's okay. Anyway, folks, I've been telling you to be prepared for this December correction because we got to go through another one of these quarterly tax payments. Remember the one in September? This is the quarterly corporate tax payment that's going to hit on December 15th. So, I mean, this is normal, okay? We have these, like I'm saying, every quarter. We get the big one every April 15th when taxes are due, and these are net drains. This is draining out the swimming pool to a degree. So you have to be prepared for these. These are things that they're just like regular occurrences, like the tide coming in and out, twice a day. So nothing to be afraid of. You can play this if you're, trading oriented. Like if you want to play the short side, I would be raising cash right now if you want to do that, or taking some profits on your stocks, or maybe buying some puts or inverse ETFs. And, because this will last now through, I think it's going to last through most of December. If we look at the prior quarterly tax payments like September, it lasted into October. So we should get the same sort of effect. Is this the beginning of a new bear leg down in the market? No, it's not. And I say this with utmost confidence, and it has absolutely nothing to do with Fed monetary policy going forward. We're going to have this month, when is it? I don't know what the date is. Let's see. It could be next week, actually. Yeah, the 15th. I believe the 15th we'll get the Fed meeting with, wait, the 15th is not, that's the 14th. Maybe it is the 14th. I don't know, but it's coming up this month. We're going to get another rate increase. It's supposed to be 50 basis points, but who knows? The Fed might do 75. Right now, futures prices are pricing in a 50 basis point rate hike. But again, it has nothing to do with that. And, I've been explaining actually that these rate hikes, we are seeing really significant increases in the fiscal flows coming from interest income, right? We're almost 50 billion in the first 2 months of this fiscal year, October, November. We're like 45.5 billion additional income transferred into the economy from these rate hikes. Now that's something you're not going to hear anywhere except from me. I mean, the only thing you're going to hear or read is how terrible and how awful and how this is, draining the liquidity and and all this negative stuff, and it's horrible. And because that, first of all, that's what people believe. They only see, rate hikes as a negative, and they don't understand that, like what I said in my last video. I mean, when we're talking about price adjustments, which is exactly what rate adjustments are, some people are going to win, some people are going to lose. There's no, in general, there's no loss of income. It doesn't fly out into outer space. And actually, in this particular situation where you have rates increasing and the government is a net payer of interest, you're actually getting an addition. So anyway, we've been all through that. So these quarterly drains, these quarterly tax payments, they've been good opportunities to, pick up stocks on the cheap. So you get a pullback here. That I preface this by saying, is this the beginning of a new leg down, a new bear market leg down? No, it's not. Because when you step back and see the big picture, it comes right back again to what I've been telling you, basically forever, that the government is running large deficits, which translates into additions to the financial balances of the economy, of the non-government, and that's just adding water to the swimming pool. Now, it's not adding at a rate that we saw in 2020 and 2021 with the COVID stimulus, but we went through that major contraction in fiscal support in the first half of this year. Then it stabilized exactly like I said it would. I even gave you the dates. And then the swimming pool starts filling up again. The market starts coming back. On Friday or last week, we hit the highest level since September. So now we're going to have a correction based on this fiscal drain that's going to happen around the 15th. Sometimes, we start to see the negative impact about a week before. Fiscal flows peaked out on November 15th when we had that quarterly interest payment. And then last week we had two big days. We had, Thursday, which was December 1st. So we had all the first of the month payments that went out. That's a big day. That's like a 90-something billion day, because you get, that's a day when you get Medicare, Medicaid, military pay, veterans benefits, disability, all that stuff that gets paid on the first of the month. Then Friday we had a Social Security payment, so we had two, back-to-back strong days. And now it's going to kind of drift down, at a slower pace. The daily spending is going to drift down at a slower pace. Because right now we're running almost 30 billion average. The 10-day average of these daily spending flows is like 29.6 billion. We'll probably come down, maybe 20, 21, maybe even slightly less. And then then we get hit, boom, on the 15th with that quarterly tax drain. And, what is a tax drain? I mean, that's, people's bank accounts get drained. I mean, there's just less cash to deploy. And it takes time for government spending to replenish what has been drained out. I mean, this is the fourth time this year that I'm explaining it, and I'm going to continue to explain it every quarter because it's important that you understand. I mean, these are things that are, if you have a trading mindset, you absolutely can play these cycles. These quarterly, you get the quarterly tax payments and you get the quarterly interest payments. You could definitely play these cycles. And if you're not trading oriented, then, you could sit back and relax and you don't have to freak out and panic like, oh my God, what's happening? Because all the headlines are saying it's the end of the world. And it's not the end of the world. They don't understand. And believe me, I'm telling you this right now. When the market starts going down, as it did today already, what do you think the headline was? Oh, we had a very strong service number. The service sector number was very strong on some survey. So that must mean the Fed is going to raise rates. It's the same stupid argument put out there over and over and over again. And like I said on Friday, I said, if you don't do anything, you must sell. You must not sell, but you must go against ignorance, stupidity, especially willful ignorance, like people who desire to be like in a fog, like not knowing. You got to go against that. I mean, you don't really need to know anything else. But the point I'm making here is that if you have understanding, like if you know, like, why is this happening? Think about like ancient peoples. They didn't understand, science. I mean, when things were happening in nature, a thunderstorm, lightning, for example, they explained it as the gods were angry. They maybe didn't even know why the gods were angry. Maybe they took it even a step further to try to placate the gods, to try to calm their anger. They might They might offer a human sacrifice, maybe a child. Horrible. This is what comes from ignorance. So like the analogy, of course, the reality today is not as severe. We're not sacrificing anyone literally, hopefully not anyway. But I mean, the explanation will always go back to that same thing. Like this is, the gods in this case are the central banks, that's the Fed. The gods are angry, so they're gonna, we got great economic activity. More people are working. The service sector is expanding. Industrial production is up. That's terrible. We must sacrifice. So the Fed has to come in. This is the explanation. This is what they use. And again, I think I said this. If I didn't say this on Friday, you literally have trillions of dollars being managed by Wall Street on the basis of these kind of crazy beliefs. Trillion. Think about that. I mean, when you think about that, it almost makes this dude, Sam Bankman-Fried, look like a genius compared to, you have all these, very serious people on Wall Street. Went to all the top schools. And they're jumping around. I talked about what happened last week when we had on Wednesday. They're buying up the market like crazy because Powell said a few things that they felt were that was friendly commentary with respect to the outlook for monetary policy. So they were buying up the market like crazy. Remember, the Dow was up 600 points on Wednesday. Then Friday comes and we have a much better than expected job report. Hey, people are working. The economy is churning. It's doing well. We better sell now. And they sold. And I sent out an email, buy that dip on the morning. And that was a trading move because I knew what was coming. I know that, for example, mid-month we're going to have this tax drain. So I'm prepared for this. My subscribers are prepared for this. Hang on. So yeah, when you have understanding, you don't got to be afraid. You don't got to freak out at the headlines saying, oh no, the Fed's going to raise rates because the economy's doing well. First of all, that's the wrong approach to what they're trying to do, but that's irrelevant. They're going to do that. The Fed's going to do that, and other central banks are going to do that. Not all of them, by the way. For example, like Bank of Japan is not doing that. They're sticking to their guns with negative interest rates. And you see, as I've said before, very, very low inflation there, even though Japan is a major net importer of petroleum. All their energy needs are basically imported. And even with the big increase in price year over year, they have very, very mild inflation. And that's because they kept interest rates very low. But the central banks are going to do that because that's their orthodoxy, that's their belief. But you don't have to, you don't have to go along with that, and you don't have to be frightened by that. You only have to understand what's going on. So that's the picture for this month. We got a quarterly corporate tax payment coming in on the 15th of December. And we're going to see the daily fiscal flows are going to slow down from the rate that we saw in mid-November through the end of November, which was very, very strong. As I said, that was the strongest flow rate since May. Okay, and some stocks even recovered to their April highs. But that peaked out. Now, it doesn't mean it's gonna, start trending down. It's just gonna decelerate a little bit for the rest of this month, and then it'll start picking up again in 2023. 2023, by the way, one thing that I really, really like is that there are just everywhere you look, there's calls for a major recession in 2023. Now that was the call for this year, okay? Hang on. And we did have a contraction in the first 2 quarters of 2022, but then, as the fiscal stabilized, the economy started to rebound. But we're still having these forecasts of a major, major recession in 2023. And I can tell you right now, unequivocally, that's not going to happen. I mean, 2023 right now, to me, looks like a really, really strong year because these interest income transfers are going to be ramping up significantly by next year. I mean, not just discounts on T-bills and newly issued securities, but interest on Treasury securities as these, the current securities mature and new ones are issued with the higher coupon. You're going to have that. And you're going to have a major, major boost in Social Security benefits because of the cost of living adjustment. So, plus, you're going to have military spending. I talked about this. I mean, we're in Cold War II. Let's hope not World War III, because then everything is everything I've said just is irrelevant. I mean, it's out the window. It's like survival time, if that. We can't write that off either. I mean, there's still pushing war. So, but from an economic standpoint, 2023 is going to be very strong. So think of this month now. If we get a pullback this month, that's an opportunity. I mean, it's an opportunity to really, like I've been saying, like load the boat and then go away, go golfing or go away for the whole year of 2023. You're gonna make out like a bandit. It's gonna be a banner year. That's how you got to look at it. All right, everyone, stay calm. If you know what's going on, there's nothing to be afraid of, and there's opportunity, big opportunity. All right, that's it for today. See you tomorrow. Bye.